Brought to you by Ayoko, Africa's leading integrated technology services company. It's time for Tech Talk. Fintech group Optasia has the backing of one of the largest financial services groups. For an undisclosed sum, FirstRand has acquired a 20% stake in the company, which is due to list on the JSE next week. This as the bank aims to bolster its exposure to new business models and technologies such as AI in the world of lending. Business Day's Mudiwa Gavaza joins us with more insight on this. Mudiwa, thanks so much for your time this afternoon. So we've been hearing about Optasia, right? It's preparing to list, interest coming through because it's backed by Ethos Capital and also operates in that fintech space. But maybe as we get started, you can tell us what Optasia actually does.
So they are a microfinancing specialist. And what they do is they specialize in helping to disperse loans. They have obviously a pool of money, and then they help a number of different institutions with their loan products. So at the base, they are a lending company. And then in South Africa, the way that people would have interacted with them without knowing that it's them is if you have ever taken out an advance on airtime, right? They are the company that is behind the airtime advance products that we see from Vodacom, that we see, from the likes of MTN. And they've been doing that in a number of different countries. They are based, founded in Dubai, but obviously operating all across the African continent. They work with the mobile operators, like I just suggested, but also work with a number of different banks in the countries that they operate in.
And is there anything unique about its model, Mudiwa, given the kind of investor interest it's garnered, the kind of backing it's garnered?
So what's unique, like a lot of financial technology companies right now, is how they go about doing what they do, right? So fintech companies have done well in that, unlike banks, they tend to do one thing and they do that one thing really well, and they do that one thing in a slightly different way to what we've seen. So a company like Optasia sort of sits in the realm of what are called alternative lenders. Alternative lenders being your companies outside of the banks and your traditional lending institutions that are lending to people that would normally not have access, to those things. In South Africa, you can think about the likes of Retail Capital. You can think of, I don't know whether they are now just called Lula or Lula. They were Lula Lend in the beginning.
Yes, I remember.
But I believe now they have had a name change. I think they're now just called Lula. But that's what you're looking at. You're looking at that type of thing. If you remember, I believe we had a discussion maybe 2 or 3 months ago about how TransUnion and MTN were going to be using call records to help to score people when it comes to loans, right? And this is the same type of thing. A company like Optasia is doing credit scoring using alternative data sets, and that's what helps them when it comes to something like your airtime lending, for example, right? Because that's not a traditional, bank type of lending product. So you need to be using different types of data to assess. Do you give someone 5 Rand, 10 Rand, 20 Rand? What are the behaviors on the network? All of these things. And that then helps, an operator, to make those types of loans. So they've been doing that type of thing for a couple of years.
So what we're basically doing is sounding the alarm for people that don't pay their airtime advance. Just know that it could affect you when you're applying for a loan. Let's get into the rationale behind, FirstRand's investment into Optasia. I can imagine that the synergies there lie with FNB.
Yes. So the way that they have, described it. So I think the first couple of things that I will mention is the valuation. not disclosed, but we can sort of infer,
Okay.
because we were able to get a sense that when it comes to, I need to check the actual number, when it comes to the IPO that Optasia is about to do on the JSE, they are looking at giving about 30%, of their stock, all right? And that, given the price range that they released last week, you're looking at 6.5 billion to roughly just under 8 billion for 30%. So using that, you could almost do like a backward gauge, to say what is 20% worth and that type of thing. Obviously, price discovery is still happening. Final valuations will come in the coming weeks. So we are not sure 100% what FirstRand paid, but we can almost have an idea, based on that. Oh, that's one. Two, they're looking at how do you bolster the capability of an FNB, to your point, using these alternative methods that we're talking about, because Optasia actually uses data mining, AI, to be able to score, those credits, those credit scores and all of that. So you can imagine that for FirstRand, they're looking at that capability and saying, actually, we could actually make use of this inside an FNB. That's the business that they have identified to say this is the one that will most likely tie in. That's one. And then two, they're possibly looking at an overlap of territories.
Yes.
Yeah, because Optasia operates on the continent, FirstRand also operates on the continent. How do you help, each one of the two to either break into a country that the other one isn't in? How do they work together in the countries that they have an overlap? Yeah.
All right, and just back on the IPO, I can imagine that an investment by a big financial institution like FirstRand is a big vote of confidence for Optasia. Do you think this could improve investor sentiment when it comes to that listing?
So the main thing is understanding two big points. The first one, we had a meeting with the team from Optasia the other day, and they actually assured us that because this is an off-market transaction, it doesn't affect the arrangements that have been announced so far around the IPO. The 30% is still, going to be, the 30% of shares is what's going to be listed.
Okay.
Yeah, the price ranges that I've just described, that hasn't changed yet, so that hasn't changed. What changed is that certain of the existing shareholders sold off part of their holdings to FirstRand.
Okay.
Yeah, you've got the likes of King Supreme, Wahavier S, Zoe Enterprises, BH Holdings, ADP3, Kronos, and Mala Capital. Those were existing investors, and they've basically been able to sell off part of their holding. My understanding is a lot of them still hold on, to part of their stake, and it's a huge vote of confidence from a FirstRand, because pre the IPO, it's almost drumming up that investor excitement to say, actually, the FirstRand are so excited that they
got a 20% stake.
They got a 20% stake. They managed to convince the shareholders pre-IPO to, buy up that 20% stake. So stuff like that helps to drum up that investor interest, so that when the IPO does happen, you are able to actually have a properly subscribed public offering, on the day, on the week, and make sure that it's a success.
And, we've been seeing so much deal-making activity in the financial, services industry. We spoke about another deal just last week with Capitec, and I think it's Stub, Nedbank and eCoca, as well as Optasia now and FirstRand. And you mentioned that we're seeing a wave of this because it's how banks, lenders are looking at leveraging at these services, products that these fintech groups offer, right? Because they are good at that one thing. Does Optasia fit into that realm of being good at one thing? It seems to be a bit of a different player.
A bit of a different player, but I would say the capability when it comes to scoring people in a different way. Also, the airtime advance type of offering that they have. Let's not forget that FNB itself runs a mobile network called FNB Connect. So I do think that there are a lot of synergies that are going to come from there. The other interesting thing about Optasia's relationship with FirstRand is even before FirstRand has taken this 20% equity, FirstRand is actually one of the, I need to get the right word, it's underwriters or a guarantor, to Optasia. Because for them to disperse loans, you need to sit, with a pool of money that you're dispersing into the market. And up until, in South Africa, Optasia has a relationship with Standard Bank and FirstRand as the people that are there to almost back them and as their guarantors to be say like, we got you, for this. Going forward, it will be interesting to see whether maybe FirstRand can maybe add to Optasia's pool, when it comes to the resources that they have on hand to lend. What I understand about how these guys lend versus, let's say, an FNB is that because the amounts are so small, right? We're talking 5 rands, 10 rands, 20 rands on the airtime side. And then on the normal microfinancing side, it's also still small amounts. Usually the loans come back at a very fast rate. So your need to go out into the market to get capital is slightly different or less. So that's the situation.
All right, let's leave it there, Mudiwa. Thanks so much for your time and sharing your insights with us today. That was Business Days, Mudiwa Gavaza. Brought to you by IOCO, Africa's leading integrated technology services company.